Thank you, Allison. And I'm going to start actually with our website. And I just wanted to make sure that everyone in the room should be here in the room because we have some new guidelines this year. So if you are a relatively new program and you cannot tell us who you were serving, you had people in your program and you were actively serving in March of 2022, then you are not eligible to apply for the responsive process. You have to have had programs up and running with people in them in March of 2022, 3 years of results of impact. Also, the things that we do not fund are any activities that include the practice of promulgation of faith. So if you are a food pantry and you pray with the folks that are receiving the food, you are not eligible to apply. If you encourage them to join your church, you are not eligible to apply. If you're running an endowment campaign, you have a debt or a deficit, or you've already started something, but you have to pay for what you've already started, you are not eligible to apply for those expenses. Any sports groups or leagues that do not provide academic and other social support. So if all you do is play baseball, you are not eligible to apply. If you are thinking about starting programming, I go back to that first rule. You don't have results from 3 years ago, you cannot apply for starting a wraparound program. If you're an organization that has a fiscal sponsor that's outside of the Greater New Haven region, and fiscal sponsors are okay, but you need to have a local advisory board if you're using an out-of-town sponsor so that we know that people here in this community are overseeing what you're doing. If you are an LLC, a for-profit organization that has a fiscal sponsor, you are not eligible to apply. And if you are a nonprofit that is closely affiliated with a for-profit business that shares mission and leadership, you are not eligible to apply. And if you are a PTSO, PTO, PTA, or booster club of any kind of academic program, pre-K through 12, you're also not eligible to apply. So if today's session is not for you, thanks. You are still welcome to listen in, but these are because preparing a budget is an important thing to know how to do. You're just not eligible to apply to us if you fall into any of those categories, and that's for any application at all that we have. I want to get rid of that and go into our preparing your operating budget. So the first part of this conversation is going to be about the local application and preparing a general operating budget. So for the statewide folks, you might want to just, you can multitask and go do something else if you're really good at already preparing a budget. This is really for the fundamentals of preparing a budget. Let's talk a little bit about what financial statements and terms you might hear thrown around and how they relate to what we're doing today. So you will hear a program budget. A program budget is about one specific program, the income and expenses of one program. You may use that to apply for a program application for those grantors that have program grants. This is not a program grant. This is general operating support. So we need to know everything that you're doing. There are some smaller organizations that might confuse this with an operating budget, program grant, because you may only do one program. But if it's not quite the same, you also have to account for those administrative and overhead and shared costs that you have above and beyond the actual program, and that needs to show in an annual operating budget. A profit and loss statement. It's based on your operating budget, but this is sort of a snapshot at the end of the year. What did we actually bring in? What did we actually spend? Therefore, how much did we either win or lose? How much did we gain or lose at the end of the year? So the profit and loss statement looks back, not at the actual budget, but at the actual expenses. An audit. An audit is prepared by an independent auditor, CPA, to review your annual financial activities. If you have an operating budget of $1,000 or more, you must, in the state of Connecticut, you must have an audit. If you're between 500 and 1 million, You must have a CPA either do a review or an audit. It's no longer required. The threshold changed. It's now $1 million. An audit is a good way to understand what's really going on within your organization. Inside that audit, you're going to get a statement of activities. That statement of activities is like a profit and loss. It shows you your whole activity for the snapshot of the last 12 months. But it's separated for IRS purposes into program expenses, fundraising expenses, and administration. So you can really see where you are in doing what type of work, how much is going into program, how much is going into administration. A balance sheet, unlike the profit and loss or a statement of activities, is not 12 months of activity. It is like your checking book, your checkbook. How much money do you have in the bank? What are your total assets? What do you own in buildings and equipment and the value of those things? It's a snapshot at a point in time of what your organization has. It is not a forecast of how you did over the last fiscal year. It is where you stand in cash position. If not another penny came in tomorrow, how much money do you have in the bank that you'd be able to spend? Your balance sheet will tell you that. And the 990. Every 501c3 must file a 990. If you have less than $50,000 in income, you have to file a postcard, the 990N, that says we have less than $50,000 in income. If you don't do that for 2 years, they take away your 501c3. And if they take away your 501c3, it is really hard to get it back. So I would encourage you to make sure that you're filing that 990. Some of the other terms that you hear are direct and indirect, program, administration, or overhead, in-kind. We're not going to talk too much about those today, but I just wanted to make sure that we honored them and brought them into the conversation. So direct expenses are the things that you're actually putting out for programs, things that you can directly attribute to the cost of doing the work that you do. Indirect expenses are those things that happen within your organization that keep your operation running, but are not directly attributed to a program. You may have insurance. Some of that insurance may just generally be directors and officers insurance. There is an expense there. It's an indirect expense. You couldn't do your programs. You couldn't have an organization if you didn't have it, but it's not a direct program expense. So that would fall into the indirect or administrative and overhead side. In-kind money. In-kind is shown as donated goods or services that don't involve the exchange of money. So if you have someone donating food to your food pantry, or snacks to your after-school program, or materials for your art classes, those are in-kind donations. The donor can put you can put the monetary value on those of what it would have cost you to buy them and show in your budget as that. So you show it as an in-kind income. You also show the use of those as the in-kind expense. You can put some volunteer time in there, not your board time. Your board is expected to give board service. So your board's time and volunteer work would not be included in that. So I'm going to continue and get on to what we're here to talk about today, the real operating budget. And this was not the place where we really want to stop for questions, because those are things just that are background for you. So what we really want to talk about are financial statements and terms, and is the annual operating budget. So each year before your fiscal year ends, your board and staff create together, and the board approves, ultimately it's the board that approves the budget, a 12-month snapshot of what you expect your income and your expenses to be for the next 12 months. You use it to guide what you do throughout the year. It doesn't change I'll show you a form that will give you an idea about of how to show a variance, but it does not change throughout the year. It's an expectation. Everyone knows that things will change a little bit. You may see additional income. You may see a big loss of income. You may see additional expenses or fewer expenses. That's expected to happen. By preparing this budget and knowing what you expected, your board expected, then you can throughout the year monitor and react to make sure that you're going to be able to balance the year that you want to balance. Let me bring up a sample budget for you. Okay. So this is a sample of an operating budget. You're going to show, and you will get a template for this. So if you want to use this form, you can. This is a fairly sophisticated one. This is assuming that this organization has staff. So here, the executive director makes $60,000 a year. The program director is making 40, and the development director is only going to get 30. We'll find out why about that in a little while. So that's the full-time staff that's in the organization. I've done the calculation. What's the percentage of wages that we pay in taxes, insurance, and benefits for the employees? So if they get medical insurance and we have to pay the FICA, we have to pay Social Security, we're paying other benefits. It's 26% of my full-time staff. So I'm going to put 26 here, and it automatically does the calculation for me. So these three folks come up to a total of 130. This does the math. It's 26% of 130. So that's my full-time cost for full-time employees. Then I go down to part-time employees, same thing. We also pay taxes on our part-time employees. So there is some kind of fringe rate that has to go in here. We have counselors for a summer camp. We have a development assistant, and we have a bookkeeper. Here's the part-time wages. Here's the calculation for what those fringes are. So the total salaries between the full-time and the part-time are 187. The total fringes, 39. So our total personnel costs are 227. Now, if you choose to use this template, put in more rows if you have more staff, fewer rows if you have less staff. Change the names, change the rates, change everything. If you use this template, do not touch these boxes because they do the automatic calculations for you, and it will give you a warning about not touching those boxes. But put your full-time staff here to see this is your whole operation. What is it going to cost? Then we go to the non-personnel or other than personnel services, OTPS, non-personnel, program specific. So these are things that are direct costs to the programs, and I'm using that plural, to the programs that I operate. Well, we have guest speakers that come in, and I'm going to give them about $1,000 in stipends. And you can see the lines here. I haven't filled in everything because not all of these are relevant. Again, add lines, subtract lines for what's relevant to you, but put in your total cost of what you expect throughout the year across all of your programs for program-specific expenses. And there's what it comes out to, $11,900. The next chunk in this format that we have is shared expenses. Those are the indirect or administrative costs that are above and beyond, that are not directly program, but still are part of running your organization. So you pay office rent. You have a telephone system. You have utilities that you pay. You have an auditor and you do fundraising. So these are the shared expenses that have to go across all of your programs. This is your overhead or administration. Every organization has it. If you're not investing in your overhead and you're not investing in things like fundraising and someone to help you keep your books, you're probably not going to be very sustainable for long because you need to spend money to continue the organization. So think about what your shared expenses are. There may be some that fall into both categories. Let's take insurance. You're going to have directors and officers insurance. You're going to have general liability insurance for the organization. But let's say you do a really risky program. Let's say you take your young adults on a ropes course. Well, you're probably going to have to get a certificate of insurance for that ropes course. It's going to cost you an extra couple $1,000s. So you may have an insurance certificate under a direct program expense while you still have the other insurance under general insurance. Make sure you're accounting for as much as you can as direct expense when you can, because that keeps your overhead lower. The flip side is then the revenue. And every time you prepare a budget, you should be turning in a budget that shows revenue and expense, and it should be shown as a balanced budget. Oh, I'm sorry. Let me go back to that. It should be shown as a balanced budget. So here's what I've listed for income. Here I put Community Foundation for Greater New Haven. Again, this is aspirational. It is not necessarily what's going to happen, but if you're applying for a grant for $25,000, we'd like to see where in the where we fit into your budget. So there's the $25,000 that's coming from the Community Foundation. This is how we are going to balance your budget. So maybe you get money from your bank foundation, some other family foundations, a big business that you work with. Again, change these to be relevant to you, change them as they balance out. You might do a board appeal, you do an annual appeal. You might have money that you saved from last year that you're bringing forward. You get government grants. Who do you get them from? It helps other funders to know who you get your money from. So who do you get your money from? And then what other revenue do you have? Do you charge fees for what you do? This is your earned income. Do you do special events, fundraising events? This automatically gives us the total of the revenue, the total of expenses, and look, they pretty much balance. So this is a balanced budget for the year. I'm going to stop there to see if there are questions before we go on. Anything in the chat or any live question, you can unmute yourself and ask a question.
Jackie, my brain is melting, so I can't type fast enough. So I'm going to use my speaking voice. This is Alicia.
Okay.
I'm really intrigued by the last section here where you talked about this being aspirational is okay. And, you'd like to, for example, if you're applying for a grant, it's okay to put that in there, or you anticipate doing the Great Give, for example, and you have a target goal. Last year we did that. We did an aspirational budget with some grants, and we didn't get any of them. And so we sort of walked that back and thought, well, maybe we're not supposed to be putting our grants into our budget. But so I guess my question is, it sounds like if you're you're going to apply for a grant, it's okay to put that in there, but not an abstract, well, we're going to go out and file for grants. We just don't know what those grants look like yet or what they're going to be like. Is there a distinction there in terms of a general rule of thumb or best practice?
That's a really good question, Alicia. Thank you. Yes. So the budget has to be based on reality. I mean, it's what we hear in our municipalities. It's what we hear in our federal government. It has to be based on history and on what you know of the future. So if you have always, let's use the Great Give, for example, if you have always raised $3,000 in the Great Give, last year, the year before it was $2,500, then you raised $3,000, it's likely you're going to be somewhere around that $3,000 mark. That's a reasonable number to put in. If you say, oh, we have to balance our budget, I'm going to put in 10, that's unrealistic. Because where is that going to come from? Unless you have already lined up a major donor who said they're giving you $5,000 as a challenge, then maybe there's a chance that you can make that 10,000. If you've never gotten grants from any of these grantors before, you have no history with them, then I wouldn't count on all of them being successful. I'd say, maybe half of them are going to give us 3/4 of the funding. What's your history with the funders that you're requesting from? And be realistic about what you can aspire to. But you want to create a budget that reflects what you're trying to do over the next year. So if you have a plan that I'll use the community foundation. If you're going to introduce a new program because you're going to get $50,000 from the community foundation and you only get 25, the day after you get that award letter that says 25, you're going to cut $25,000 in expenses because you can't do the whole program because you didn't get the money. So you've got a plan for partial funding from all those grantors. What would go first? You still have to honor the terms of the grant, but if a funder gives you less than you asked for, that funder is going to come back and say, so what realistically can you do with the funds that you've been given? And you can have those conversations. Funders do not expect you to do everything you said you do if they don't give you the money you asked for. So prepare the budget based on reality, on history. If you know there's a new, it's hard to say right now, but if there's a new government program that's starting and wow, there's going to be great new money for drug elimination, and you work in that space and you think you have a good chance of getting that drug elimination money, then put some of it into your budget. But if you've never done that before, in this climate, the government is not likely to do a drug elimination program. Don't count on getting that money and balance the budget around that. Great question.
Yeah, thank you. That was extremely helpful.
Anything else before we go on?
Yeah, Jackie, I had a quick question.
Yep.
On your budget sample, you included depreciation. Is this an accrual budget or cash basis?
This one is cash basis. I think this is cash basis. So I put that there, just thank you, Ryan, as a prompt, because if you build depreciation into your budget, then what you're doing is covering the replacement of whatever it is that's depreciating, the equipment or the facility, in years to come. Because that, if you can balance your budget and cover depreciation, then technically you end up with a surplus. Right?
Okay. Yep.
Let me say that again. So you can build in a depreciation line or a reserve line.
Mm-hmm.
You can show a surplus at the end of the year. You can show a deficit at the end of the year, explain it to the funders. You can, if you've banked up monies for a bunch of years and you have too much in the bank and now you're going to spend it all taking a risk on something and you've got a deficit budget for the year, that's okay, as long as you explain that that was planned. Same thing with banking money. If you are raising money for a major expense, launch of a new program in 2 years, and you want to clear $50,000 a year for the next 2 years, show a reserve line as income, meet it as expense, meet that, and then you've got $50,000 extra that's not accounted for in expenses. That goes into the bank, and you can bank that for a couple of years and then have that reserve to be able to launch. Even if you're just trying to build a reserve fund, not for something to launch, but just to have capital. You can build in a reserve or a depreciation line specifically for equipment. If you know you get computers every 5 years, the minute you get your new computers, you should figure out what it's going to cost you in 5 years to replace them, divide by 5, and save that every year. So that in 5 years, like, oh my, how are we going to afford these computers? Well, we've been working on that for 5 years. It's not a sudden expense.
Thank you.
Thanks. Anything else? Okay, I'm going to go back to sharing.
I have a quick follow-up.
Yep.
I thought it was interesting when you were showing us balancing your books that your expenses and revenue were close. And I'm curious if you can speak more to that because I've received advice in the past that it can maybe be a turnoff for funders to see that your expenses are so close to what your revenue is.
Oh, no. It is going to be, it's going to show funders that you have a plan for how to cover your expenses. If you, now remember, I put the foundation's money in there. I showed very clearly how the community foundation helped balance my budget, and therefore that there would be a hole were they not to fund us. Funders want to know that you have a plan to make the money you need to cover your expenses. If you tell me you're going to spend $100,000 in expenses, but you only know where you're getting 75, what is it that you cut first? I don't know. You're going to cut the program that you're asking me for money for? Where do you plan to get that other 75, and how will you balance the budget? How can you be effective if you don't know where your money's coming from? You don't have a plan. Does your board not engage?
I think I meant the other way around. I think I've been told in the past, like if my expenses is like, for example, 1,000, right? That my revenue should be higher, like at least 130,000 or more. Like it shouldn't be so close to what my expenses is.
Maybe they're telling you to build in administration or overhead.
Okay, maybe.
So if your program expenses are 100,000, then your budget is going to be probably at least 130,000.
Okay.
Because you've got those extra expenses. So don't ever just show your direct program costs, because that's not enough to keep you alive.
Okay.
Always show the administration and shared, and always ask the funder to cover some of that. Funders won't take a second look if it's 10%, 15%, they don't do too much. When you start getting up over 20, 25%, funders say, that's getting kind of high. Why is it there? As long as you can justify it, that's fine. But you can also often take what you're calling overhead and really figure out that it's a direct program expense. Salaries are often a direct program expense. If your executive director spends hands-on time in a program, by all means, charge 10% of the executive director directly to the program. The executive director is not necessarily all overhead. Same thing with the bookkeeper. The people in the program have to get checks. The bookkeeper is spending time on that program. Maybe it's only 5% of their time, but some of that bookkeeper could go into direct expense, which lowers your overhead.
Thank
Great
you.
question. Okay, we good? Okay, I'm going to go back to sharing. So always include income and expense. We've seen budgets that come in that just tell us what the expenses are, only gives us half the picture. We talked about doing a planned surplus or a planned loss. We talked about these things, the person other than personnel expenses. So another way to take a look at a budget is as a program-based budget. So if you are a larger organization that runs multiple programs, I'm going to show you a different budget form. This is available online. We can also send you the template. What you can do is you can say, okay, so here's our $60,000 executive director, right? From that last budget, we had a $60,000 executive director. Well, this is clearly a youth program. This executive director spends 10% of their time in the summer program and 20% of their time in the after-school program, and just 5% in the teen group, and 5% in mentor. So now I've apportioned 40% of the executive director directly to these programs. They also spend 25% of their time on fundraising. And then they spend 35% of their time in administration, dealing with the board and dealing with other things. So now I've got 100% of my $60,000 executive director. But if I go down, I can see that in these program expenses, my summer program so far is costing me $6,000. By breaking it out this way, you can see what each individual program costs. Now this line, this column, should match your board approved budget. You break it out by program and administration and fundraising. It all totals across. Here's the direct or specific expenses. Here's the shared expenses. The shared expenses you can do either by percentage of personnel. So if overall 10% of the people that work for my company work in the summer program, then the shared expenses would be 10% of the operation. So again, my approved budget, 10% of my personnel is in school summer, 10% of my shared should be charged to summer. This is another template that we will send to you. Really great to do these calculations because it helps you specifically say, wow, my summer program with the shared expenses is costing me a whole lot more, because you roll it down and you also put in the revenue, which is on a separate tab. And then you say, I am spending $130,000 on my summer program. I only have grantors that are giving me $100,000. So that's where the board makes the choice. We are so committed to the summer program that we're going to raise that $30,000 to fill the gap. Or maybe this is a loss leader. Maybe this is bleeding money and it's not so important to us. We didn't really set out to do a summer program. And we get rid of that, which leaves more money, less loss to cover the other programs. This helps your board have that conversation. Any questions there? Okay, going on. This is where that template exists. All of these templates are on this website. If you have not been here to strongnonprofits.org, I really recommend that you go there. They have tools for planning and evaluation and monitoring. So you need cash flow statements and how to prepare. And they have a great just budget a tutorial, a video on how to prepare a budget. Again, it's prepared. The staff sort of drives it. The board approves it. And that's what you live with throughout the year. And I'm going to show you one more. Something you can share, what you should be sharing with your board at each board meeting. So here's that original budget that we had, the executive director who gets $60,000. What you should be sharing at your meeting is where you are. Now, an executive director is going to get equal monthly payments. So you would expect that as the year goes on to be equal. The real key is the anticipated year end. So if we're halfway through the year and the executive director made $30,000 by then yeah, absolutely, that's right. We're halfway through the year. But we still expect the year end to be 60,000. There's no variance. But let's say this executive director just left. 6 months in, the executive director left. We're not going to pay somebody for a couple of months. Now, all of a sudden, what on my year end is 40 because I've got a gap. Well, I just saved $20,000. Here are all my expenses. Wow, food and refreshments, eggs went right up. Prices went way up. I expect that I'm actually going to spend $4,000. Now I just lost 2,000. Didn't get that grant from the community foundation. Uh-oh, there's a big hole. But my family bank came through. Oops. And gave me an extra 0. And they covered it. So did I have to worry about the community foundation? No, I just made it up with this one. This gives your board a really great picture on a monthly basis or a quarterly basis whenever they meet of where are we year to date? Where do we expect to be? Because not everything is 12 equal months. If you run a summer program, your expenses are going to go way up over the summer. You're not going to see a penny spent from January to May. June, July, August, your costs are way up. September, they drop back off. So was your summer what you were expecting it to be, or was it not? This is a great form to work with on with your board. Last thing, one more thing I want to show you before we go on to the statewide, and I promise you we are going on to the statewide. Trying to bring up this. So for yourselves, you should keep that a budget narrative. So we did a sample budget of, here's our executive director that was 60,000, our program director was 40, and our development director only 30. That's a pretty cheap development director. If I go back in 3 years and say, why do we pay so little? I can go to my narrative and say, well, we only hired that person on April 1st. So it's only showing 3/4 of the year. So if I write myself a narrative, 27,000 for counselors, what did we pay them back then? $18 an hour for 10 hours a week for a 30-week program, and there were 5 counselors. This then gives me a real sense when I prepare my budget next year. Wow, we couldn't get people for $18. We're going to have to go up higher. Or 30 weeks was too long. We need to cut back the program. We need 7 counselors instead of 5. This will give you a chance to reflect on the decisions you made last year, really understand what those numbers meant. So I recommend you always do a budget narrative, as detailed as you possibly can. Okay, we are now going to go on to the statewide organizations. So if you serve only 25% or less of your population in Greater New Haven, our 20-town region, not New Haven County, the 20-town region that we have, then this part of the discussion is for you. If others are interested, you're welcome to stay, but we're not going to go in the same kind of detail on a general budget. For those of you who are statewide organizations, all community foundations are going to want this information. All community foundations are very site-based. There are issues and challenges and opportunities in Hartford and Branford and Derby and Danbury, but not all community foundations are going to do them. They have to be the site specific for that region. So know what the lay of your community foundation is that you're applying to. Know the region. Some direct attributable costs. There again, you can do some of the shared expenses because of course it's going to you're going to have to reflect on what it costs to run your total organization. But the program expenses we want to hear about are what you spend here, the staff that works here in our region. And I'm going to go to the best sample budget that I've ever seen. And this, I will tell you, is Arts for Learning. This is their last year application. So this column C is their statewide total organizational operating budget. everything this organization does. Their total operating budget in that year was 1.5 million. Then they went through each line by line to say, of the individuals that give, who gives us specifically for New Haven? What corporations are based in the greater New Haven area? What foundations are in greater New Haven? Do we get city grants from the greater New Haven region? Same thing with individuals, other foundations that are, so these are restricted for specific programs, the way they break it out. They do some special events. How much of it could be attributed to New Haven? Sponsorships for things that came from New Haven sponsors. And then what activities did they do here? What performances, what fees did they collect on activities that they did here? So this is their New Haven income based on the total income. So you're seeing it's just under a third. And I'm assuming that this foundation is the Community Foundation for Greater New Haven. Then they did the exact same thing in expenses. How much was spent on personnel? So that's the folks that directly work here, and how much of the executive director's time is spent on programs that work here. The fringes. Staff meals and travel. They're based in Hamden, so fortunately we don't have a lot of travel. But what is it that they expended for artists that may have lived in other areas to come to New Haven? What artists were paid to work here? What supplies did they have? How were they trained? Just the New Haven, in the activities that happened in the New Haven area. Portion of the payroll services. If you're paying personnel costs of 195,000, then you've got payroll services, that's a percentage of that. Again, about a third. So you see that consistently throughout. Office supplies, you're probably using the same calculation. And dues and subscriptions. This is the way we'd love to see your statewide organization budgets. Your total picture, so we see exactly what you are doing in totality within your organization, and then what part of that is attributable to New Haven. I'm going to stop there for questions. I'm going to stop sharing for a bit and see if there are questions about that. You can unmute or you can drop it in the chat. Happy to do it, Adriana. We don't want to discourage statewide organizations, but our donors for 96 years have given us money for Greater New Haven. So we have to steward that money in a very responsible way and make sure that our priority has to be what's happening here in New Haven. And as long as we have a good picture of what's happening, that will help us make the decisions that we need to make.
Mm.
Do you have your hand up? Go ahead.
I thought of a question after all. Excuse me. I wanted to ask you. I see that example when it's physical location activities potentially. How would you advise an organization like ours where the majority of what we do currently is virtual. So let's say a coordinator that is considered Northwest region, Litchfield area, is running a workshop and it's virtual, so families can come from all regions of Connecticut to attend that. So would we use the budget narrative and then talk about the number of people served? I was just curious how to
Do you-
capture that.
Do you collect registration information?
Yes,
So do you know
We
who
do.
you're serving?
We know towns.
Right.
Yes.
So you're going to talk about, even though it's not being physically done here, you're going to talk about the number of people that attend those virtual workshops.
Mm-hmm. Oh, okay.
If you can give us those demographics. I will tell you, if you can't give us those demographics, I won't say it's not going to be funded, but I will tell you it's not going to be as competitive an application. Those organizations that are statewide or national that have a website that somebody from Orange and Milford could look at are not going to be very competitive in this process.
Mm-hmm.
We need to know that they, first we want to know that people here are being served, not have the opportunity to be served.
Mm-hmm.
So
Yes.
the fact that you collect demographics is really important. That will be helpful.
Yeah.
Yeah.
We do collect the city, we ask for it, not everybody gives it, but we want to too, because we say we are statewide. So we say we support all 169 towns. So it's our own way of saying, are we doing that? Who are we reaching and who aren't we able to reach? And how can we, make sure that what's missing? Why aren't people connecting with us in certain regions when we say we are statewide? So we use that information. But when you made me think about the like salary of coordinators, we have coordinators in each region, and of course our South Central coordinator is encompassing the New Haven County and other towns, but then our Northwest coordinator may be serving people from New Haven through the time that they spend on a virtual workshop or even a support group, because we offer a lot of things virtually. So it no longer becomes so much regionally when it comes to employees, I guess is what I'm talking about, and trying to capture that.
Yeah. Yeah. So yeah, I think, and you sparked a question from Alicia about, struggling. So do we ask them where they work or their home address? I'm not sure that it makes a difference work or live.
Mhm.
People generally, this is a generality, but tend to live somewhere near where they work.
Yeah.
So capturing that information, you can, I would ask them, if they're coming as an individual from a business to learn, then ask about the business. If they're coming as an individual themselves, like if so Alicia, do you ask in the registration or whatever you're capturing, name of company? Optional. If you say name of company optional, then they're going to fill out, if they feel that that's what they're representing, they're going to fill out the rest of the demographics based on that company. But if it says optional and I'm just here myself, I'm going to fill it out as if I'm a person, an individual. We also take a look at your website to see, like, where do you do your events? If you're holding fundraisers, if you're holding support groups or activities and fairs and parties, are they all someplace else or are they sometimes in New Haven? So we look at that as well.
Yeah, that makes sense. I mean, it's never, there's a lot of gray, but by just listening to you answer this question, you did kind of give me some insights about how we might, try and get our arms around this, because I think we've just been sort of muddled over it. But I do, and we also do a lot of virtual training, but we also do a lot of in-person events. Many are held in New Haven. So, yeah, all right. You've given me some things to ponder. Thank you.
Okay. Okay, so we're coming up on the last 5 minutes or so. Is there anything else? I will go back to the last slide. Adriana, are you back up or yeah?
Apologies, I just thought of something else really quick. When you talk about overhead or indirect costs and things like that, what is your advice, especially for very small budgeted nonprofits? That, you know, if your operating budget is 100,000 and you have or 200,000 under 500,000, and then you have like an executive director and you've got those salaries in the beginning, sometimes they are, that percentage of budget could be a little higher than most funders want until you can build it out.
Well, if you're a very small organization, your executive director is probably working very much in program.
Oh, yes, yeah, exactly. Like you wear all hats.
Right. So,
Yeah.
so that executive director is not going to show up in administration. They're going to show up in the program, right?
Okay, yes.
If they're spending half their time boots on the ground, hands in the wash, then half of their time is going to show up as program, and only half is in administration. And if they're actually doing more, then you put it over there.
Yes, thank you for that reminder. Thank you.
So for the more sophisticated budget preparation in the room, as you think about the statewide organizations, I'm just going to put up the last slide for 1 second, because there are different ways. We talked about attributing the shared expenses based on FTEs. So if 50% of your FTEs are in New Haven, live and work in New Haven, then 50% of your shared expenses might be attributed to the New Haven budget. You can also base it on a couple of other things. You can base it on other than personnel expenses. So this is a case where you have really high other expenses, but not a whole lot of staff. Then you might want to take a look at the OTPS and say 60% of what we do is in New Haven, based on the materials that we buy, the bus passes, the supports that we give to our folks, the speakers that we bring in, the consultants that we bring in. Those other than personnel expenses are much higher in New Haven. You can base it on that. And then the third option is based on clients served. So if you serve as a statewide organization 100,000 people, and 50% of your people, well, in this case, 25% of your people live in New Haven area, then you may want to do 25% of your shared expenses as New Haven attributable. So FTEs, other than personnel, or clients served, 3 different ways to look at how to account for those shared expenses. I saved that for last because that makes some people's brains freeze. OTP, other than personnel services, is OTPS. And FTE is full-time employee. Full-time equivalent, actually. So if you have 2 part-timers, they count as 1 FTE. A lot of organizations will have lots of part-time staff, and you can't discount them. You want to get them somewhere into the count. So your full-time employees are 1 FTE. Your part-timers might combine to make 1, or you know, three people may make 1, depending on how many hours they work. What about salaries charged New Haven? Yeah, that's the FTE cost, the salaries charged New Haven. Yeah, same thing as the way I was calling it, FTE. So it's what you're expecting, not just salaries, but it's the salaries and fringes for those employees. Don't forget to add those in when you're talking about your expenses. Okay, we're just about at time. Anything else while we're here? Grant related. Okay, we will get to you all of the templates that we looked at. We'll send you the sample budget that we looked at with that $60,000 executive director, but we'll also send you a blank one so that you have the template for that should you choose to use it. I again encourage you to go to strongnonprofits.org. Lots and lots of resources there. Feeling the love. Thank you. And thank you all for coming. We appreciate you. And we'll talk to you soon. Please call if you need any help.
Thank you, Jackie, and I will send you, this was amazing, so I just wanted to hop on the 3-session series. So
Good.
informative, and you gave us just enough to start implementing without being overwhelmed, so I thank you for that.
Thank you. Thank you for that feedback.
Thank you. And I put a selfishly topic in the chat for future.
Grant
Have a
management.
great day. Thank you. Yes, grant management, because we hear a lot about grant writing, but what happens after, especially as you grow and you're like, oh, I've got 3 grants, and it's trying to really understand that other side of it and making sure that we're doing all the things. So I thought I put that in there. So thank
Good
you.
thought. Thank you.
Suggestion.
Thank you so much. Have a great weekend.
You too.
You too.
Thank you.